Hello everyone, K-Kim here. Today is January 19, 2018, Friday. Welcome to the market update. Again, my name is K-Kim with the Traders Club. As I record this video, market should be open another 2 hours. So I am recording this intraday. Hope you guys had a good week trading thus far. Market continues to grind higher to the upside. Last week we talked about the extended nature of this market. We talked about how you should approach this market, and also I written an article called "Be Fearful When Others Are Greedy." So we're not going to talk about all of those today. We're going to keep this video short. There aren't a whole lot to talk about. As of now, we don't have much evidence to go by. We don't have much data to go by. Only thing, right? There's no bearish signal. There's no bearish data except the fact that it is extended. But it is very difficult to put a case together and just pinpoint where the top is going to be. It's a very, very difficult proposition to do that. It is a difficult market to chase this market up here because you will get burned. This market knows how to knock people out when they chase. But it is also very difficult market to short because nobody knows exactly how this thing is going to see its corrections. I've been calling that the S&P 500 is going to see 5 to 7% corrections, and Dow, the Nasdaq will probably have more, but Semi is probably going to correct much more steeper than any other index. But we don't know, are we going to come straight down, or are we going to see maybe a cultivation of a minor term topping pattern that takes 2-3 months to cultivate? Or are we gonna consolidate before going higher? We don't know exactly how it's going to play out. So what I can say is this is a level that you don't want to be heavily start new fresh positions. Definitely not a level to short, but definitely not a level to chase either. You know what I'm saying? If you've been long, if you've been positions, you've been accumulating stocks since last year, since 2016, maybe there are certain stocks has already made its good move, then it's maybe time to take some profits. You know what I mean? And then maybe rotating money into, which I think the precious metals are going to do well this year and next year, which I'll talk about. And I told you guys that I was going to write a report on it. This week I was quite busy, but maybe after some more evidence that I can see in gold. We haven't seen real good evidence yet, so I'm kind of still has not yet put out the report why I believe that gold and silver and GDX or the miners is bottom. Still think that there's some more evidence that needs to be there, so I'm going to still wait a little bit more. So we'll talk about it in a video later in this video. But so this is a level. Obviously, you want to be cautious, not cautious that the whole market is going to crash down. The market isn't going to crash down, but I do think that statistical probability suggests that the 5 to 7% correction is looming on the S&P 500. Keep in mind that S&P 500 has not yet seen more than 3% corrections since March of 2017. March of 2017, we saw 3.5% correction, and that was it. Trust me in this, in 2012, 2014, that time frame, that duration was known as the most hated bull market ever known in history of this market, right? And yet, every other month, again, I'm talking about 2012 and 2014, yet every other month, it seems that we would have like either 5% corrections, 6% corrections, 7% corrections. Every other month, S&P 500 going back to really this November of 2016, the worst correction we saw was 3.5% correction in March. So this market has trained and conditioned traders to be complacent, that This is new era. This is what it's always going to be. I believe 2018 is not going to be like 2017. I believe a lot of people missed out on a 2017 move. A lot of people trying to short this market in 2016. They got hurt. They got burned. So in 2017, they had no capital to trade. A lot of people who were skeptical, a lot of bulls who were skeptical and fearful in 2017 with what's going on with the Trump election and what's going on in North Korea and interest rates and whatever, you know, they're listening to, they were scared. So they missed out on a move. So what do you think they're doing now in early 2018? They are chasing this because they are fearful that because they've been waiting all throughout 2017. They've been waiting. In 2016, they lost all their money trying to be, you know, they got too inspired in that movie, A Big Short, that in 2016 they could maybe make a big money trying to short, and they got burned. In 2017, they missed out, and now finally, a lot of bears who got burned in 2016, finally converting into a bull in early 2018. And now the skeptic bulls, the fearful bulls who stayed sidelined in 2017 is finally jumping in, fear of missing out. The market is great at that. The market, and not only that, people who did make money in 2017, the market has conditioned them to think that this is how it's gonna be always. I believe in 2018, volatility is going to show. I think end of 2018, I think S&P is still going to be positive, maybe around 10% or 12%. Could be more, but I still think that 2018, we're going to end the 2018 positive. I just think that 2018 is going to be more hectic than 2017. I think the volatility is going to hit. And a lot of players, a lot of market participants who looked at 2017, how smooth it was, they missed out on it, so they're going to think that 2018 is going to be smooth like that. I don't believe so. I think 2018, the volatility is going to kick in. I believe that every other month or so, maybe every 2-3 months, we're going to see these kind of corrections, like 5%, 6%. It's going to be much more hectic. So I'm still thinking 5%, 7% correction is coming on the S&P. I don't know exactly when, how, in what formation, in what fashion. We need we will need more evidence of that. I've been taking necessary cautionary action. I've been putting on some hedges and protections because I do own so many multitude of stocks for my long-term investment portfolio, but I've been liquidating call options on those individual stocks as much as I can, and I've been doing the last couple of weeks. So Spider continues to grind higher. 10 EMAs here. Usually, you know, it doesn't go a while before this thing comes back down to 10 EMA. Last time you can see in that move, it moved sideways before we hit that 10 EMA sideways, come back to 20 and got up. And we had that long gap here between the price action, the 10. Normally it will come back down to kind of retest the 10. So looking at more of a minor term, I think sooner or later we're going to retest the 10. If we lose that 10, the 20s here and 50s here. So those are the levels to watch for the minor term supports and things. So let's follow up next week and see what we got going on here. Let's go to gold. Again, like I've been talking about since December and January, that I think that gold and the miners and the silver, I think this market is starting to see a good signal that the possibility that is seeing some bottoming, positive signal that still needs confirmation. We haven't seen a full confirmation yet, but I think we're seeing some kind of a consolidation here that took almost 5 years to build. 5 years of basing period. I think this is a good sign for the precious metals market. And I think once we break out of this, once we fully confirm, I think gold and silver and the miners are going to do really, really well. But again, we still need some evidence of that in the price action. Obviously, the pivotal level that gold needs to reclaim and stay above. And this is a reference point, and I don't want you to be so fixated by the number 130.46. Like, I don't want you to come to me, okay, we're at 130.52. Are we fully bottom? Can I go all in on gold? That's not, this number right here is a reference point. So we want the price to kind of get above it and stay above it. And this is a level that you want to see this cultivating that primary intermediate term higher high. So we're below that. So it still needs some work, but you know, we've been cultivating intermediate term to minor term higher highs here. That's a good sign. We got the low, we got the higher low. This low is definitely higher than that low, so that's a good sign. We got some kind of an intermediate term perspective. We got some kind of an uptrend going on here. So looking at more of a minor term though, 10 EMA has been a support. We've been kind of pulling back, see 10 EMA getting back up here. So let's see if we can continue to do that and gap back above. If we can gap back above, again, look at this as a reference point, not to be precise with the number. But if we can get back above 128.26, maybe go to 130, pull back, and then finally get up. I don't know exactly how it's going to play out. You could get up and then pull back. You could get up and pull back to 128 and then continue higher. It could go up, pull back, and then go up. I don't know exactly at this point, but I think these are some of the reference points you can see here. Those are the numbers to overcome for gold to really find that strength to the upside. And these are the numbers right here. Again, look at these as a reference point. Don't come to me, oh, we're below 120, we're at 122, 85K, is it gonna roll over? Look at a reference point, because last time, remember, we got below it, you know, scared everybody out right there below that support, and then it made its move. So market is a master at that, master deceiver. It knows what everybody's looking at. And so I won't be surprised even if this thing gets up here and then everybody's looking at these numbers and then it gets up and then fakes everybody out, comes right back down, and then gets up. So a lot of something like that happen, or this thing starts to come down, it gets down below 122 and then gets up. So you always want to look at these numbers as a reference point, like that vicinity. So far so good. I really like the fact that it's been holding up well here. Let's see if we can get something going next week. Let's see if we can get above 128, 130, and we'll follow up. And again, I will write my report once I see more of a concrete evidence. Silver is interesting in that because, well, while gold has been cultivating intermediate term higher highs, well, silver has been cultivating lower highs and lower lows. So silver is actually seeing more of a weakness and more lethargic price action here in the intermediate term. It's actually technically in a downtrend. It's interesting because gold is in an uptrend in the intermediate term. Silver is in a downtrend in the intermediate term because of these lower highs. So what silver needs to do, silver needs to gap back above 1716. Again, reference point, somewhere in that vicinity. Maybe get up, pull back, retest, get slightly below, freak everybody out, and then cultivate higher high and higher low, and then cultivate some kind of an intermediate term uptrend. I think if gold continues higher, I think sooner or later silver will catch up, because usually silver is the one is more emotional one. So like if gold comes down, silver tends to come down much more. If gold goes up, silver tends to give you more yield. So it's more volatile, you know, like it will move much more to the upside or downside. So, but I think if gold can lead, I think sooner or later silver is going to follow. But it will be more concrete when we see gold and silver unanimous in that they both cultivating higher lows and higher highs in the intermediate term. Let's see what happens to that in the next couple of weeks here. GDX is pretty much in between gold and silver, right? Remember we talked about gold cultivating higher highs and higher lows in the intermediate term, while silver cultivating lower highs and lower lows in their intermediate term. Well, gold is cultivating equal highs and equal lows. It is pretty fascinating here how they're just kind of all like they got the different levels going on here, but essentially though, this sideways move is bullish setup. It is known for, because seller, the bulls don't move like that. You know, that's how you know how they move. Bulls do not consolidate. Bulls, bears, what they do is come down, go up, 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 right? That's how bears move. Bears hate it. Bears do not like sideways move. Bears want to bring this thing down as quickly as possible, as fast as possible. However, the bulls, they are cultivators. They are patients. Bulls usually take his time to cultivate, take his time to establish certain pattern before he makes his move. So, good thing about GDX is that we have that very, very significant higher high. That's a good cultivation. And we all know that things doesn't go straight up sometimes. Sometimes it needs take time to build that base. So it pulls back. When it does pull back, it doesn't come all the way down here. It comes, stops short in the middle. I wouldn't be surprised. This is somewhere like a 50%, 61.8% retracement zone on the fib. And then we start to cultivate and build that base. This is not from the bear. That's not from the bear. Bears hate that. Bulls are cultivating this. This is a bullish setup. Just because doesn't mean that it's going to be smooth. It could come down and fake everybody out and then reverses higher. Or it could get up, look like it's a breakout, and then comes back down and then go up. It's going to be active. It's never going to be easy. But I think, overall, if I just, there are these nuances, these subtle signs where I see in gold and silver, they're slowly, I think there's some hidden accumulation happening in this market, which I think essentially, subsequently, I think it's going to result in a primary term uptrend cultivation. Again, we still need a lot of more evidence of that. So when I see more evidence, I'll write and report. But I am in a camp that I think this market is starting to make is some good cultivation, some constructive move here. And as gold is leading. So let's see if the gold and silver and GDX, they all start to kind of unanimously endorse each other. Right now, again, silver's in the minor intermediate term, they're in a downtrend. Lower highs. GDX, a sideways consolidation with gold is leading. So let's see if they all kind of come together in a sound movement where they're unanimously condoning each other in this movement. Right now, we're just kind of in between everything. GDX in the middle, silver kind of in a downtrend. So I think still need some more time before we can fully confirm and say, the gold is finally bottom. I think we had that sign, the subtle sign, but still need some more to prove itself. So that's everything. Hope you guys have a wonderful weekend and good luck trading next week.